If you've never invested before, opening your first investment account can feel intimidating. Which broker should you use? What should you buy? How much money do you need? The good news is that investing has never been easier. In this video, I'll show you the exact first steps to get started safely. Saving money protects your cash. Investing gives your money the opportunity to grow. Although investments can go up and down, history has shown that quality businesses have generally increased in value over long periods. Before investing, make sure you have money set aside for emergencies. Unexpected events happen. If you need to sell investments during a market downturn, you could lose money. So make sure you have an emergency fund already established. Paying 25% credit card interest while hoping to earn 10% from investments rarely makes financial sense. High interest debt should usually be your first priority. Pay that down before you start investing. Then you'll need to find an investment account with a broker. When choosing one, look for low fees, easy to use platform, good customer service, and access to ETFs and shares. Also, you want one that is properly regulated. You don't need thousands of dollars. Many brokers allow you to start with very small amounts. The important thing is consistency. Many beginners try to pick the next big winning stock. Instead, many experienced investors begin with broad market exchange-traded funds, ETFs. These spread your investment across hundreds or even thousands of companies. Rather than trying to predict the perfect time to invest, many people invest the same amount every month. This is called dollar cost averaging. Sometimes prices are high, sometimes they're low. Over time, you buy at an average price. The news will constantly tell you that markets are crashing or booming. Successful long-term investors usually focus on years rather than days. Never put all your money into one company. Diversification spreads your investments and reduces risk. New investors often try to get rich quickly, trade too often, follow social media tips, panic during market falls, ignore fees. Avoid these mistakes and you'll already be ahead of many investors. The stock market rewards patience. Small investments made consistently over many years can grow into significant wealth. Investing isn't about getting rich next month. It's about giving your money time to work for you. So let's recap the first steps. Build an emergency fund, pay off expensive debt, choose a regulated broker, start investing regularly, buy diversified investments, think long-term, keep learning. Small beginnings today can lead to much bigger opportunities tomorrow.